Right, okay, I'm gonna break down this very nice GJ order flow flip short, which I took quite a while ago now. I think it was like a month and a half or so ago. And we are going to go through it with reference to this trade plan again to help better understand it. So starting off in a 4 hour and on layer 1 of the plan. So we want to establish the H4 structure, work out H4 expectation order flow, and identify the strong and weak structure points at the key liquidity levels. So first off, on GJ within this bullish leg, so we broke to the upside, swept to the downside within this bullish range. And if you look closer, what's happened? We failed to create new low, swept a reasonable significant liquidity point here, and failed to create a new low, and eventually flipped order flow bullish. We're very bullish on a 4 hour, but in more recent price, we've actually swept this trap right here. And again, what do I mean by trap? This is a very clean order block or supply zone before a very inducing push to the downside. As it's so obvious, there'll be a lot of traders who can just short out of this because it caused such a big reaction in the market. And I see these areas as liquidity points and traps. So people are selling out of them. I like them to get swept. So we get to this area, we sweep the trap. And again, we're obviously very impulsively bullish. And I'm going to identify liquidity levels, which are, again, it's not too much to see in this leg. There's a lot of liquidity resting below these lows here, a lot of stacked wicks, and a lot of sell side liquidity there. But mainly we're H4 bullish. I know we're just taking the trap. We haven't shown too much respect for it, but we're quite overextended, taking out this trap. And this is a scenario where I'd be looking at the 15 minutes to determine what trade I'd be looking for. Um, but this is a scenario where the 15-minute order flow flip model is valid because we've taken out key structure, key liquidity, and we are overextended. So that is layer 1 all done. Now I drop to the 15-minute, and what's happened here? So we broke higher above this trap. Again, we're quite impulsive to the upside, quite overextended, and again, that itself is not really a confluence, but it stacks with what's to come later. So after we've had this impulsive push to the upside, we form a higher low. But what this low does, it fails to create a new high. So we get bullish structure. We failed to put in the new higher high. So that is the first indication that we could be undergoing an order flow flip. And what do I mean by order flow flip? Let me go over this. So again, by order flow flip, I mean the market phase talked about in layer 2. I'll go over this now. But it's essentially, this is the criteria of an order flow flip. So we need a sweep or fail to create a new high or low, depending on what side of the market you're on. A chalk, change the character, can be internal if you're using a failure to create. Another sweep, then a boss. And again, essentially what I mean by an order flow flip is I'm identifying when the market is entered the retracement phase to push to the opposite side and seek liquidity before returning and continuing the trend. So here we're going to look for our order flow flip criteria to identify if the market's entered the retracement phase to take liquidity before returning bullish. So my order flow flip criteria is first we need either a sweep or a failure to create a new high. So the sweep would be this high here. We just take this high, which we don't do, but we push up and fail to create a new high. And again, the trade, we haven't even entered trade at this point. So you see all this price prior to your entry. So at this point, it's quite clear we failed to create a new high. So failure to create, we get a chalk. Again, an internal chalk. This is the only time in my trade plan where I'm allowed to take a trade from an internal chalk, usually or external. But as I'm trading from a failure to create a new structure point, it makes no sense because obviously I want to take the low that made the new high, and obviously the high failed to create an external high, a swing high, so it's going to be internal. So that's fine in this scenario. We have that internal chalk. Next, we want a sweep. So we sweep a buy side liquidity, which you get here. We sweep this high, and then we want another boss. So this move to the downside, the sweep came from this low So we came from this low and swept buy side liquidity. So we need to close below this low for our boss and then that will be our full order flow flip criteria once we close below this low. So again, we get that, get our sweet boss. So now order flow is now flipped. So now EOF is now to retrace and take liquidity. So if you look at this now, where is the liquidity? Where we have a low that's failed to create a new high. Well, that makes that low a weak low. Also, there's a lot of like stacking of lows here. That's an extra confluence. But this low has failed to create a new high, which makes it a weak low. Therefore, this would be a liquidity. The sell side liquidity we'd be targeting as the first potential point we could take before returning to the upside. And again, I marked out this liquidity level earlier. We could go to this, but on order flow flips, we always take usually the first point liquidity or the first weak structure point. So here, the first point liquidity is actually here in this scenario, but we got a weak structure point just below. We're going to target that. So that is this gone over, this order flow flip criteria. And now we're on layer 2, so M15 order flow is now bearish, we're in a retracement phase. Wait order flow to allowing for H4EUF, which it has, and market phase, order flow flip phase, order retracement phase, sorry. Now we're going to mark out key liquidity zones and POIs that align with this EUF, and then wait for the price to sweep the liquidity at your zone. So, where's our POI in this area? So whenever we can trade off two types of POIs in this plan, either loan 5M, loan POIs for 5M models only that do not sweep liquidity. So that by that I mean, say we have this one big leg and there's just one POI and it doesn't sweep, we're allowed to use that POI. But any other time, say there's multiple POIs or any other scenario, we want the POI to sweep liquidity first. So this is what I call a 1, 2, 3 POI. The nicest POIs, the most like clean POI is a higher probable POI. So this POI sweeps sell side, the buy side liquidity. We sweep this high, which is the one. We then break structure. Again, this is our breaker structure, internal breaker structure here. So that's 2. Sweep, boss. Then 3, I want it to have liquidity resting below the POI. Obviously, if we're buying, it'll be above, which is here. So that's 3. So we have a 1, 2, 3 POI. And as this POI is small, I believe, yeah, smaller than 20 pips, that's our GJ limit. It needs to be smaller than 20 pips for a 1M model. So if it was greater than 20, you'd have to use the 5M. Get rid of all that. So this is valid for 1M trade, and all 1M trades are valid for 5M scalings if the opportunity presents. So we're keeping that in mind. And so we're in a retracement phase, looking to take out liquidity. We've got a weak low here, 1 to 3 POI, so we're looking to short from the sweep of this liquidity to this low. So first off, I'm going to drop to the 1 minute. Again, we sweep. All seems to be above 0.6 pips. Again, 2 pips, happy days. Get our chalk. So we've taken the 15-minute liquidity, swept on the 1. Again, not necessary, but a nice little sweep, which then makes a new order flow range. I say order flow, I mean like it's not actually order flow, it's we learn from cash, but it's essentially just our chalk order flow area, like our tiny ranges. So it makes a new range. So we make a low that makes a new high. So the criteria for that is we need to have a push up, opposite candles, and then take the high with a gap. There needs to be a gap. And then we take this low and close below. We have to close below. We need a candle close. And that is a valid 1M chalk for me. So that's our chalk. And then our entry model and the 1M. So again, this trade fits all this criteria. You can pause and read this if you like. But this is the criteria for 1M. It has to tick every box. It's quite like, the 1M is quite a rare model because literally everything has to align to use the 1M, because obviously we don't want to be using such a small confirmation if everything's up there that aligns. And then the entry model is down here. So the M1 chalk we just got, then either M1 liquidity, so any super buy side liquidity on the 1 minute, or a 50% impulse retracement. So we chalk, and again, this is a big impulse candle. you're allowed to enter off the 50% fill of this candle. Again, if we were to close another candle to the downside, we'd extend this. But this is the impulse as of right now. We set our limit there. Targeting this swing low here for a nice 1 to 12. Again, I'll start playing that. Nice tap in straight away. Push to the downside. And again, I've also been wary now at the 5 minute. So where is the 5M shock? So all 1M models can have a 5M scaling if the opportunity presents. There's a 5M shock. So I'm just going to play this trade until that happens. So yeah, very nice push. Get our 5M shock. Now, where's our 5M liquidity? There's no gap here. It's not a 5M liquidity point. Pushing to the upside. And again, there's 2 entries here. I actually only just seen the other one now, but the one I took at the time I'll go over. But this is actually a valid impulse. So you could take a smaller R entry. This is actually perfectly valid. I haven't seen this before. Quite a big stop. Again, it just it's not the greatest R, but that is valid. That's not what I did at the time. Again, would I take that? I'll be honest, below 2R, I wouldn't. But it is valid because I trade probably the minimum trade I'd ever take is probably a 1 to 1.75. But the strike rate does allow that. But again, I highly doubt we're doing this in a scenario. And so what I actually did at the time, we push up, and I'd a limit above here, above this liquidity. But we push up from a big wick and push away. I move my limit to this high here, this 5M liquidity sweep. So again, I'm just talking about the 5M model now. It's exactly the same as the 1M. You need a 5M shock, 5M liquidity sweep, or a 5M 50% impulse retracement. And then same rules as the 1M, but you have some exceptions. These are the exceptions, so it all fits this. It all fits what's happening right now. And then we have our liquidity here. Stop below the shock high. Just here. Targeting the same low. Got a nice push away, nice liquidity point. Push back up. Got a tap in. We get a nice push to the downside. Again, very, very nice trade. I caught this one in the real time. 1 to 6. I wasn't on charts for the 1M entry. It's quite unfortunate, but very, very nice trade. So what, 1 to 12 and a 1 to 6. Over 18R, just a mad opportunity. This is kind of, again, not all my trades are this nice and this like mad R. I trade, a lot of my trades are literally 1 to 2s, but because the strike rate allows for that. But this is kind of a textbook scenario of an Orderflow flip. Pretty perfect, very nice trade. And yeah, very nice opportunity. I literally have never seen an Orderflow flip trade this clean since, but they do happen quite often. It's a nice model. And yeah, I think that's pretty much it. So we take out that swing low as expected. We do push a lot lower, I believe, after. But again, we always trade with a plan toast to trade. We don't not bother that it runs further. We made our profits again. That is kind of the textbook. The textbook trades are the ones that allow a 1M entry and a 5M scaling. So that's pretty perfect trade. Very nice opportunity. And yeah, I hope that helped a bit. I did go over everything. And again, layer 3, obviously, I did actually go over that. That's just the entry model. So when I want a 1M and a 5M, I'm just going over this on the entry model time frame. So yeah, very nice trades. I hope that was helpful. In a bit.